Joining me now is Chris Zaccarelli. Chris, good to see you. Thank you so much for being here. The president has been teasing lots of deals. We had a string of them yesterday. Your reaction?
Yeah, we're seeing a lot of momentum. Clearly the beginning of the year with all of the trade tariff announcements that were made in April, there was some concern in the markets. We saw a big drop, but markets have really seen that we're actually going into a negotiating position and we're starting to get some wins. This news out of Japan will only further help the market move to all-time highs. It's clearly showing positive momentum within the economy and with the outlook. And when you have tax cuts and deregulation, which have been happening, and with the big beautiful bill being passed, there's a lot of tailwinds in the market now as opposed to headwinds like we've seen before. So I really think what we've seen so far is a great recovery, and we expect that to continue at least in the near term.
Yeah, I mean, you got to believe this is going to create growth and also bring in all this revenue. Scott Bessent, the Treasury Secretary, told us yesterday that he's expecting $300 billion in revenue just from tariffs this year alone.
Yeah, I mean, again, you're seeing the fiscal picture change. We were in a situation where you're talking about these large deficits and the debt to GDP ratio getting too high. But if those tariff revenue is able to come in, help to eliminate some of the deficit or reduce some of the deficit, and yet not dent what's happening with corporate earnings, what's happening with the economy, then we could have the best of both worlds. Clearly, earlier this year, the concern was if tariffs were too high, if there was too much of a drag on businesses, we would see a pullback. But if we can have GDP continuing to grow, seeing revenues and corporate profits higher, that's what will drive the stock market to all-time highs, which we're already seeing, and it should continue from here. It looks like things are happening in a much more positive way right now. You've really seen that momentum shift from April through June and now into July. So far, so good from our point of view, and we are optimistic in going forward.
The chip stocks have been the leadership group. I want to get your take on that because we're also waiting on earnings. That's sort of in the backdrop here. We've got AT&T and GE Vernova reporting second quarter earnings before the bell. But Alphabet and Tesla would kick off a string of big tech numbers in the coming weeks, Chris. So you got Alphabet tonight, Tesla tonight, and then next week names like Apple, Intel, and many others.
Yeah, exactly. We're about 20% through earnings season so far as the S&P 500 is concerned. Earnings are beating around 8% on average. So it's been a good earnings season so far. But to your point, we're going to be looking to some of the larger parts of the S&P. Over 30% of the S&P is in the technology sector alone, let alone communication services and consumer discretionary, where you'll see, Amazon and Alphabet and some of those companies. So we'll be looking this afternoon to see how Tesla and Alphabet do. Next week, as you mentioned, Apple, there'll be Microsoft, Amazon, really some of the biggest tech names in America will be reporting this week and next. And so if they can beat that bar and show some of the earnings strength that we've seen this far into the earnings season, then again, I think that's another positive for stocks. It does seem like there's a lot of tailwinds at play. And given what we've seen so far through the first 20% of earnings season, it does appear like we're going to have a good second quarter. So we're, again, looking forward to seeing what's happening this after that continues.
And Chris, you're looking at industrials right now. You want to buy industrials.
Yeah, as far as the sectors we're looking at, look, technology, artificial intelligence, extremely important. Yep. We've seen those moves and we think they'll continue. But if you're looking at sectors outside of technology, we do think the industrial sector is worth taking a look at. It's something that has started to do better this year, but has lagged for the past few years. And if you look at the economy improving, again, we saw a 0.5% negative drop in GDP in the first quarter. We're going to see next week the second quarter GDP estimates. We think you'll see a bounce back there. You might see 2.5%. So if the economy bounces back, industrials could do very well in that environment.
Chris, thanks so much for being here. Great to see you. Chris Zaccarelli. Stay with us. We'll be right back.